All right, we survived Tuesday on to Wednesday. Mega earnings reports after the close. More this morning. Big winners, big losers, and bigger losers. We'll cover all of them. A little bit of rotation out there. Can you feel it? The value trade back, but for how long? Let's get going. We got a lot to cover on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Pre-market prep, we're up 14 and a quarter handle, 63.3950. Undercut yesterday's low. Nice move around 4 a.m. and just settle in. Is the high and the low of the day already in? Well, we'll see that in a little bit. 27 cents. That's how much the dollar's down. 98.31 TLT, giving back some gains from the last couple days. Down 40 cents, 87.88. Crude, bad couple days, bouncing off 75. USO up $1.24. 76.26 GLD, slightly red. Silver, slightly green. And Bitcoin, 115K area, we're up $630 on this Wednesday morning. Dennis, days like yesterday and days like today, a lot of price action, a lot of movement. I saw some stuff within the expected move, other stuff not. But what is your favorite earnings report to start with?
I think we just got to talk overall here because you have some major moves here today, and you have the tech trade coming off pretty hard. So you'd think, oh, it's going to be a real bad day for the S&P with AMD and SMCI both missing the AI trade coming off pretty hard. But the song remains the same. They do not want SPY going down ever. SPY, the most resilient, most diversified thing, I guess, even though it doesn't seem diversified, but they find a way. So why is SPY trading higher when AMD and you've got SMCI and Disney, missing, and you have other stocks, fairly major components missing, but, there's some beats in there too. The value trade, growth, value, always a pendulum, always rotating, always going back and forth. Today, they are selling growth because of AMD and SMCI. What do? They don't sell all stocks altogether.
No,
never.
Do that.
Because you're in a bull market. They don't do that. They buy value. They are buying value stocks again today. Oil higher, banks higher, airlines higher, staples higher, drugs starting to go higher. Apple, Google, Meta, the more value type, even mega caps, they buy those ones up too. Amazon as well. So they never anymore in this bull market sell everything. It just doesn't occur. So if you're sitting here waiting for a massive S&P sell-off because AMD and SMCI missed last night, you're on the wrong side of the trade. That just does not occur anymore. It is all about the rotation between value and growth. Growth goes down, buy value, SPY stays higher. That's your summary. Might as well end the show.
Yeah, I think that's a good way to sum it. These rotations, a day, 2 days, 3 days, 4 days, seems like this looks like the second day in a row because Burke had a big day yesterday. Even UNH was up yesterday. I mean, if you're looking for value, there's probably some other value stocks there to take a look at. But I looked at everything and I'm like, wow, there's some big winners, some big losers up here, but the winners are prevailing so far. Starting to leak a little bit here. We are 22 handles off the high. So high that, like I said, kind of felt like we might just chop it around today. But you want to start, get this earning bonanza on the road?
I think so. Let's start with the stock that everybody was looking at last night. And it wasn't the first report as SMCI, but I'm going to go to AMD because everybody's watching it. Everybody's watching for the earnings. And the earnings were fine. The earnings were okay, but again, we talked about a high bar coming in, and absolutely the bar was too high. So if we go to the earnings report, actually a slight miss on the sales, on the earnings, 48 cents versus 49, and 7.68 billion versus 7.41 billion is a beat on the top line. They did bump guidance up a little bit, 8.4 billion to 9 billion for Q3 sales against 8.14 billion estimates. That's a little bump up there. They talked on the conference call. They said some positive things about AI going in the right direction. The stock actually rebounded and got back up to the 174, but then has continued the leak. This is a pure example of bar too high, not earnings too crappy, but bar too high. I do expect the dip to eventually get bought here. I may be buying the dip myself. I'm long AMD. It's one of the biggest positions, if not the biggest position of my long-term portfolio. I want it to be bigger. I still think this is stock that is going to capitalize on AI long-term. Another opportunity to buy the dip.
Well, definitely a dip. I'm looking. Wow, what? I just got to ask you. I know you guys were messing around in it. I mean, this thing is absolutely wild. I mean, I saw the dip under 166 and then the pop to 174. And that was like around, what was that? That was like around 5:30. That was a wicked.
That was on the conference call.
That was a conference call.
Yeah, there was some stuff being said, positive commentary coming from the call. Also talking about CEO Oracle building 27,000 plus node AI cluster, feature MI355X AI chips, which is their chips. So there was lots of positive commentary there, and that was the big rip up. But then, the call ended, and, it wasn't really, like there was a few things said, which always popped it up, but then, the steady leak after the call.
I don't know if today's the day to buy the dip in it. If you want to
maybe not.
I just, man, look at that. Look at that move. Look at that move since April. I mean,
it's been an incredible move. I mean, that's the bottom line on a lot of companies. It's been a really incredible move, and it takes a lot to tack on more. And we've seen this earnings season really about the bar. We've seen lots of companies report earnings, which were pretty darn good, and the stocks go down because simply the bar was too high. IBM's report was fine. Stock goes down, bar too high. This has been the example again and again and again. So it was set up for that. We even talked about that. Bar being too high. That was the risk going into this earnings report, was that bar is too high. So, yeah. So what do you do now? Do you sell it all and say, well, it's over, the story's over? I don't think so. Is the bottom going to be today? It hasn't been for most stocks. Usually when they go down, there's a couple of days of consolidation and then it goes down. I mean, Amazon's another example. Amazon's report was fine. Stock's been down for 3 days, though, since the earnings report has been bought right back. So maybe start taking that for a cue, looking at, some of these others. It seems to be a few days before they start to show some life. I do think, though, long term, if you got like a 5-year time horizon on AMD, I think you'll be happy if you bought the dip today. If you have a 5-minute time horizon, I have no idea.
A 5-minute, 5-month. 162 looks okay to me today. Pre-market low was just under that level. But man, it just, the 50-day is way down here, 140. Oh no, keep eye on 162 today. That coincides with the pre-market low. You lose 162. Your next daily low is 158.36.
SMCI.
Oh, ouch.
Another stinger. Trading down 17%. They flat out miss estimates. 41 cents versus 44. 5.75 billion versus 5.88 billion. Q1 gap, see 30 to 42 against analyst estimates of 50 cents. That's a lowered guide. EPS for Q1, 40 to 52 against 60 cents. That's a lowered guide. Sales guidance lowered to 33 billion versus, actually, I'm just trying to look here. The numbers are all confusing. But anyways, they lowered the guidance, looks like, down to 33 billion on 2026 sales estimates. That's lowered from where it was around 40 billion before. So they lowered everything. Not a good report. Not what you want to see is the miss, and lower guidance. That's what SMCI delivered. At least they're honest. I can go that far because we were worried about honesty here. Well, it looks like they're honest about it. With the whole BDO and, obviously the accounting stuff and shenanigans. Looks like they've got their accounting shenanigans figured out, hopefully. That's the good news. The bad news is this is a miss and a lowered guide. They don't usually come in and buy stocks immediately on lower guides. This has got a continuous leak. Probably one that I'd stay away from for a little bit. Dell is down in sympathy, DELL. trading down about $4 here right now. That's the one that I own. I've been talking about Dell as best of breed. I say, why do I own an SMCI when I can own Dell at the exact same valuation, and I don't have to worry about counting shenanigans, and I have Michael Dell behind me. Very similar company. I think why own Dell? Why own SMCI over Dell? I'm going to stick with that thesis. I'd rather own Dell.
Right back to the 50-day moving average. Below the 50-day at 48.08, trading 47.40. Just had a little spike down. I don't know if that was accounting for some Robinhood prints or something. 45.80. But gotta let it settle down. This stock will develop a trading range after this, and won't develop it today. It's going to take a couple days to shake out. But you can see we did spend some time between 45 and 50. 50-day right there. Let's just find some ground here in the next couple days to buy the bonds. But once again, this stock in April, low of 27.60. I mean, if I'm not even going to figure 50% retracements on this stuff, because it's going to be a lot lower, and then don't want to scare people. But, we could be giving back substantial portions of these moves.
It's hard to sell in the hole too, though. I mean, this still has an AI story attached to it. If you're long the stock and you're like, what do I do now? We can't give investment advice on this show, but I've never made a lot of money selling stocks when they're down 18% either. So that's something to consider. You often do get a bounce, but the guidance bounces when they lower guidance don't come quickly, and sometimes they don't come at all. So caution there. I would be more inclined again to probably be long Dell as opposed to SMCI. Give me some technicals on Dell, because it's had an incredible run too, from $68 to $130. I don't know. I have Dell in the long-term portfolio too. I'm not adding to it on the 3% dip, but I do think that if you really are so hungry and you I really got to be in this, SMCI, I still think why not Dell?
Big run too, sub 80. I don't see. 50-day. I think if you want to add to this, Dennis, I don't know. I don't think they reported yet.
No, when do they report? Brent's there in the background. Can you hunt down for me when Dell reports, because that is coming, and it's not this week. Maybe it's next week or the week after. But this all of a sudden SMCI lowers the bar for Dell too, and I like that as well. Now maybe you wait a couple days. Maybe Dell will bounce right back. I know Kramer already this morning tweeting that he said buy Dell. Like literally, if I go to the Kramer tweet, and Kramer has been very influential lately, so we have to consider that as well. Let's just go see the tweet that he actually said. So he's going to pop on CNBC here at 9 o'clock and basically yell out to buy Dell. Let's go see what he said. Where was it?
Dell.
Yeah, he just says this. Oh, the tweet is just buy Dell. So SMCI thinks this Q4. So I'm with you, Kramer. I'm with you, fully with you, Jim Kramer. I think, if you really need to buy the SMCI dip, I'd much rather you in Dell.
Dell
August
is
28th.
Reporting August 28th, Thursday.
Yeah, so we got a ways to go.
3-4 Thursdays. Yep.
Okay.
Got a little today, I'm just going to look at it from today perspective. The after hours low coincides with your low on Friday. So it's above that. It's above Friday's low, and it's $2 above it. So we'll use that as a temporary level. And, well, what is it doing? It's trading at yesterday's low right now, 126.7, a little bit below that. So if the bulls just want to shake this off, I'd look at that as resistance right now. If the bulls want to shake it off, this report, and get a bid right above yesterday's low. Dennis, you getting peppered on any bids out there?
We're leaking.
We're leaking.
And again, we're chopping around here pretty good. We were chopping around a lot last night too. We kept wanting to go down and the market wouldn't allow it, and we just get bought back up. And we kept wanting to go down and the market would just bounce right back. And I was like, holy, is SPY resilient. Q's even to be up here, but again, we know why. Apple, Microsoft, Meta, Amazon, they came in and bought all those stocks. We also know Shopify had a hell of a day. So, we went through AMD, we went through SMCI, started with the ugly. Let's go to the good. We'll go to the good. And Shopify is good. I didn't think it was this good. So obviously there's some stuff being, bought here for other reasons here, but it's up 15%. It's leaked here. It was up 17%. 35 cents versus 29 cents is a beat. 2.68 billion versus 2.55 billion is a beat as well. some commentary in there. They're talking about quarterly revenue, margins up over 20%, set for mildly stronger quarter, tariff impact and focus. I mean, talk about resilient demand. They're talking about some cool, some good stuff, resilient demand, words you want to hear. Up 15, 16, 17% on this is a head scratcher. That is a huge move, and I don't totally get it.
You guys are throwing some tough charts at me today. I'll just go with that pre-market high, 149. Excuse me.
Oh, you got problems today. He's choking up here. He's choking up, getting all excited about these stocks. Clear your throat. Go off the back. Clear your throat up. Come back, because you've had 25 throat clears here. So Joel's got some problems here. But I'll just do the technicals on Shopify here for you, Joel, while you get your throat figured out here. 127. We closed right at near the highs in the move. So you would think high bar. And these earnings aren't even that great. But this funny market can just do funny things, and they're buying the stock up. And we are not at all-time highs, because 2021 we got really crazy up to $176. But we're coming into an area in 2021 where we did have multiple tops in the 150s. So I don't think it's completely shocking that we would top out in the 150 area here. So I think Shopify 150s, major resistance for now. Again, I'm not buying something up 15% here either. The earnings were fine. They were pretty decent actually here. I'm just shocked at the move. And I don't know what the expected move was here, but I can pretty much guarantee you it wasn't up 19 points here. Brentster's kicking in the background.
Hey,
Joel's trying to figure out he's going to get a drink of water here. So
Yeah.
I feel bad. I don't want him dying on air here. The guy's 80 years old here, so we don't want him just keeling over here on air.
A couple kind of just sort of odd things on Shopify, just a little more perspective. The company didn't actually give a per share figure in their report. They only gave a net income figure and an adjusted net income figure. So if anyone's seeing some discrepancy out in the EPS figures, that would make sense. Sources are having to go find the outstanding shares, not in the press release that they gave this morning. There could be different figures out there for shares outstanding. So you could see some discrepancy there. On the guidance, the sales growth, I think they said mid 20% range, and their growth for this quarter was over 30%. So it is decelerating growth for their guidance. Just a little couple things to chew on there for Shopify.
Yeah.
Call's at 8:32. Call hasn't happened yet either.
Let's see what they say.
So, yeah, exactly.
Yeah, curious to what they're going to say here. So it's a big move, though. If you're in it, congratulations here. Nice big move here. Kind of feels like it could be upside capitulation for Shopify, because it's a big move on pretty decent, report here. Let's do the other big one, which is Sterile Labs here, Brentster. ALAB trading up substantially here in the pre-market as well. It's up 27 points. They have 44 cents versus 32, 191 million versus 172 million. So that's a big beat on the top. That's a big beat on the bottom, and that's a big bump in guidance here. Q3 23 to 24 cents. Analyst estimates were at 12. Now that's a big beat. That looks a lot better than the Shopify report. So up 20% on this one makes a little bit more sense to me than the up 18, 20% at one point in time with Shopify here. But big beat here for Sterile Labs. ALAB trading up 27 points in the pre-market there. That is a new all-time high for Sterile Labs. Been a long time since it's been up here, Mr. Elconin. Did you survive? He's back.
Another curveball, right? I mean, screwball. I mean, what are you gonna do? You can't short it, right? 164.23. That's your pre-market high. Just keep an eye on that pre-market high. See where it is. See if you get follow through. I mean, it just broke through a triple top at the 140 area. So stratosphere here for Sterile Labs. If you got targets in this area,
stratosphere,
take it. It is. Woo! Unbelievable.
We have been in a little bit of a sell the rip market too.
Yes.
There has been some moves that, have been overdone on earnings and then have leaked back. Microsoft, obviously huge, and then, leaked a lot of it away. Meta tried to leak it away, hasn't got quite back up there. Still not looking, like it has wants to get back to those highs. So we do see on these huge beats, sometimes they do top out that day. So just keep that in mind, if you're chasing these stocks here today and saying, man, 20% is going to give me up 40%. Really hasn't been the case here.
Apple's on fire here.
Yeah, and you know what I want to say? Apple has news here breaking right now. They are like Hassett just said. Hassett says. So, who knows? But he says Apple's going to announce a new factory in the US. So Hassett likely today to hear about a new factory. Apple doesn't say something until they really want to say something. So I don't know if Hassett got, a hint from the executive or something, but we know how tight Apple is with everything. Even on their call, Apple would not give any details. They said, we have lots of cool AI stuff coming. We will not give you any details. Tim Cook especially said that. Apple is the tightest on releasing stuff. So very surprising that Hassett gets tipped off on a new factory. That's why I think it's probably just talk. I don't know if there's anything to that. He's just on probably air saying, oh yeah, Apple's going to bring us a new factory too. The media just run with it. Apple's going to bring a new factory. They just get on air and a lot of these guys are just shooting off their mouths. Maybe too much. And that's what we talk about. Transparency with this, government has actually been pretty good. You're literally just getting Trump's internal conversation continuously. So, I mean, we can say, oh, he's going back and forth and back and forth. It's because that's what his mind is doing. And he's just speaking his mind all the time, publicly speaking his mind all the time. So, I mean, one thing you can't really argue with this government here has been transparency. They've been pretty darn transparent with what they're going to do. Tariffs, well, I'm going to go back off. And you say, well, he's all over the place, the taco trade. Well, he's just thinking out loud. All these guys just appear to be thinking out loud. So I don't know if there's much to this. But in any regard, it's the kind of day for Apple. So I bought Apple last night because I'm like, if they're going to want to rally the SPY, it's going to be on the backs of Apple because it's not going to be on the backs of NVIDIA, not going to be on the backs of AMD, not going to be back on the backs of Momo trade, probably going to be backs on the value trade. And what is the value trade? It is Apple. So not surprisingly, S&P is lifting here this morning and Apple was already up $1.50 before this news hit.
I'm thinking, I'm like, Hassett, wait, Fed, a potential Fed governor. And he's been the director of the National Economic Council in the Trump administration. So we'll see. Apple up $3. It's easy to do Apple because you just had this nauseating trading range from 207 to 215 forever. So important. If this is good news, they pop and see what happens in that 207 area to get back in the trading range. So that's news on Apple. But if it doesn't come and boom, it could leak away. So Kevin Hassett breaking some news on Apple and pulling the S&Ps right back up with it, right back to where we were when we started the show at just about the 63.40 area.
But like I said, Apple trades like a staple. Staple's having a day here too. So Apple is already pretty strong. It's run another $1.50 on this headline here, but it's already up $1.50. So it wanted to go up anyways. Perfect day for that to get announced here. Does that mean Apple's going to be making more money if they bring a factory over to the US? No, definitely not. People aren't working for $2 an hour over here. $1.85 Foxconn employees. They're going to work for $1. They're going to work for $30 an hour over here, $40 an hour. We'll see. Maybe.
Dennis, why are you talking about people building iPhones?
Well, that's another consideration here too. And we talked about this. And I said, if Apple does indeed build a factory in the US, there's going to be a lot of robotics in that factory. There's going to be some jobs for sure. It's got to be some jobs, but there'll be a lot of robotics here too. I do think that's where, US, make US. Yeah, we might be able to make a lot of these products in the US, but it's not going to be people sitting on the line putting together the little components. We will have much more robotics put into this. So that's what I think longer term.
Well, they will have people working at the factories, Dennis. It will be the people fixing the robots.
Oh, yeah. There's always people to run the machinery, but not nearly as many people. Don't envision all those memes that were going around. They're going to start going around here again today because of this headline. The big heavy guy on the sewing machine sitting there making clothes or, putting little chips in, and sweat box, shops. And it's not going to be that, folks. It's not going to be that. And I challenge whether this is even true. That, we have an imminent announcement coming from Apple because Apple is tight-lipped. I highly doubt you're going to get this imminent announcement today from Apple. So many earnings reports. You guys chat Dictate where you want to
Tell
go.
us
We're going
what
to
you want.
continue to do the ones we want to do, unless you tell us which earnings report you want to do. Let's cover Open Door Technologies for our friend Eric Jackson, because it was not a good report. The GameStop Part 2 has been put on temporary hold here. Open comes out. They came in line. The sales beat. The guidance was kind of lowered. Ooh, lowered guidance. 800 and 875 million. Analyst estimates way up at 1.1 or 1.21 billion. It's a significant lowered guide. Not good. So GameStop, this was supposed to be at $82, $2.50, $1.98. Eric Jackson, this is just a hiccup in the road. It's still going to $82. Maybe he's right. Maybe he's wrong as well. I'm going to go with more of the wrong category here. Stock down 21% in the pre-market. Does it get bought back? He's going to be out there promoting it and getting out there and trying to move the stock back higher. So he's not going to stop trying here. And this retail army is still here. So it has the potential to bounce back. But we've seen again and again, when stocks lower guidance, they usually don't bounce back quickly. So I don't expect this snapback rally here in OPEN.
This is where it all started from. The $2 area. Actually, people got the heads up when it went from 1.25 to 2, but then you got the big news. It took it to the $5 area. So backward for it was even lower in the pre-market. Wow, that was way overdone. That's got to be over the expected move on this one. It went down to $1.73. And now back up at the $2 area. So see if Eric, right? That's his name, Eric Jackson.
Eric Jackson.
And
I asked him if you want to come on pre-market prep. I reached out. I messaged him. Multiple people retweeted it. Yeah, he didn't respond.
Okay. All right.
So,
well,
I'd listen to his story. He's trying to get on CNBC and Bloomberg, and I was like, I'll listen to his story. Tell me why. I want to know, and I see your tweets, I haven't really read into it. I haven't given more than a few minutes of evaluation here, but he truly believes this is a seriously undervalued company here. Maybe he's right. I'd listen to his story, but tell you right now, the market doesn't think so. So back down to under $2.
I'll let you handle that interview.
Snapchat, not doing well either. Down 18%. SNAP really hasn't participated in the bounce of the last 3 months whatsoever. This is just a crappy company at this point in time here. Now, broken story, broken stock, broken everything. When your stock, write this down. When your stock is sitting at its April lows, you got a bad stock. You got a bad stock. The markets have all rallied. There's been lots of stocks ripping higher. If your stock's still sitting at the April lows, you're in a bad stock. Snapchat, bad stock. 772 earnings, lost 16 cents. Have they ever made money? Against estimates of losing 16 cents, 1.34 billion versus 1.34 billion. Sales guidance, all just kind of in line. Nothing exciting whatsoever. There's been no AI trade here. It's got the A, but it doesn't have the I in the name. Snapchat, 17%. Not interested in this dip. Moving on.
It's not at the April low, though. If you want to wait for the April low, there's a double bottom at good old 706, 708, and 711. There were buyers at the 750 area. So shortness, a $7 was a $9, $9.50, $9.50 stock. Well, do that at your own discretion. So see what happens in Snap. Remember when they used to report before Meta? And had a couple wild days off that. Now they've calmed back down. That pop in the S&Ps was sold. And Apple is still holding up there. So sellers looking out there. I think this is kind of like a 9. We're up 9, but I think it's kind of like a soft up 9 here. At least that's the way I'm looking at it. That rally was sold pretty quickly here.
They want Oscar the Grouch. We've been trading this one in the pre-market or in the STN room continuously. Been long it pretty much lots of nights. It seems to always bounce at night because retail loves this stock, but it's had a steady leak. I do have some of this. I have size position of this in the long-term portfolio. And you know what? I say the same thing. It's getting back close to the April lows. It's been a bad stock. This has been a bad stock. The story has been ugly. The sector is in shambles. I feel like the retail community could be behind this one, but at this point in time, maybe it's like cut and get out, and eat your loss here. Hasn't been a good one. Wish I was in all good stocks, but it's not possible to be 100% right all the time. Oscar lost money, lose 89 cents versus lost 86 cents, 2.86 billion versus 2.91 billion. Expects to return to profitability in 2026. They affirmed their sales guidance of 12 to 12.2 billion, which is above estimates. So the guidance is fine here. Stock is holding on. It was a meh report. They're saying 2026 is going to be better. I mean, healthcare sector has just been in shambles. We know that. So relatively speaking, the stock has actually held up well, considering the UNHs and the CNCs and the MOHs and all those other ones. But, other things being equal, this has not performed like, the AI names and the other retail darlings. It's, back down near its April lows too.
Hey Dennis, you've been sticking with it. Yeah, I'll give you credit on this. It's not quite the AMD conviction that you had for several months. Do I like it at $13.73? Not after it traded under $13. I mean, there was a little bit of a buy the dip opportunity. Down 12 cents as always. You have an earnings report. You have a double close at the 1382, 1384. Get above that. Maybe working. That was kind of near the top of yesterday's range too. So a little tight ahead of the report. Resistance forming in the lower 14 handle for Oscar.
Continuing on. Chat's giving us a few tickers here. I'm trying to find a good one, but give us earnings. So I want to do earnings right now. There's 200 companies that reported here. It was crazy last night, and I don't know if I've ever seen this before.
Ever?
Louisiana Pacific. I don't think I've ever seen this before. We were trading the STN room, LPX. And LPX did indeed report earnings here. But they reported earnings this morning. And Joel, you need to look at this after hours chart and you will not believe it. After hours, last night, LPX all of a sudden gets offered down at $83, down 12. And then trades down to 75.07 or something, I think. See it?
Yes.
That little line all instantaneously. And I'm like, Brent, what the hell did LPX say? I'm like, this is like, a disaster. I'm like, this is down 19 points right now. I'm like, what did they say? I'm like, what were the earnings? And he's like, there's no report. It's not out. There's no earnings. And I'm like, what do you mean there's no earnings? It's down 19 points. This thing is down 22% right now. I'm like, what do you mean there's no earnings? And he's like, there's no earnings. And I'm like, oh my gosh, it's not due to report till tomorrow morning. I'm like, what is going on here? And then she goes all the way back up. Somebody just fat fingered the hell out of LPX last night. And it traded down under $76. And now they come out this morning, actually miss earnings. 99 cents versus $1.14. Not good. Sales slight beat, 755. And it's trading down $2. Well, that feels about right because this isn't some like volatile little play here. That was one of the most craziest, that might be the dumbest move in the history of stocks right there. Whoever sold LPX down 19 points. Maybe the flash crash, it was dumber, but that's unbelievable. I thought that they must have warned and like saying, we're never going to make money again. Nope. There was no news. Oops. Fat fingered at somebody. Yikes.
Well, it looks like someone was trying to sell like maybe 5,000 shares or something. And they took it down.
There was some stock that traded. So let's say, hypothetically, 5,000 shares traded. Not all at the low, but there was a lot of shares that went off at 83.
Yes.
So 5,000 down 12, like somebody pissed away like good 80, 90,000 bucks right there. Doesn't sound like a lot, but I mean, on a percentage basis, it's pretty incredible. Let's just throw away 20% of our money. Yikes.
Yeah, wow. Whew, there you go.
Like often, if they give me a lead on something, I'll be like, oh, they're giving me a lead. I really thought it was such a big fall that I was like, well, it's out. There has to be out. Nobody's selling LPX down 20% ahead of the report. It has to be out. Nope. That was like an oops of all oops for somebody. Sorry if you're in the chat listening to our show. And you did
Yeah,
that
I
trade.
doubt that person. They're not in
Our chat's smarter than that. Our chat would never do anything like that.
Our chat
traders
was
are all
buying
smarter
it
than
at
that.
75.05, and Dennis, you were probably sitting there at 75 biz. Saying,
I was waiting for the earnings report. I'm asking Brent. I'm like, it's out. There's no doubt it's out. It's down 20%. It came out early. They must have really warned. Nope. Craziness.
Okay, can we talk some commodities?
Let's do it.
Okay. Al Kluis, Wedbush, covering the commodities markets. Al, that's a pretty. What do you got? A mobile home? I thought you were going to be calling from the car.
It looks like a mobile home. It's a fancy hotel room in New Ulm, Minnesota.
Okay, all right, Al. Al, you come to the show, and you like to talk about commodities, and there's nothing more important with the commodity complex than the weather. How has the weather been this summer for U.S. crops?
For the central, most of the Corn Belt, it's been nearly ideal. We've had an opportunity to plant the crops late April, early May, got the corn and soybeans in. We had some regional problems, a little too cool and wet in the northern Corn Belt in June, but most in July and August have been just nearly ideal. Heat, a lot of times, extended heat will really cook the crop, especially corn is susceptible, but we've had a lot of days in the 80s, nights in the 60s. If a corn plant is going through photosynthesis, you absorb the sunshine during the day, you pack sugar into the kernels at night, and ideally those temperatures stay below 72 degrees Fahrenheit. We've been 66 to 68. So we have, I think, a record corn and soybean yield in the making, with many states likely to make new record highs as far as the yields that they have report this year.
Not good, right? Oversupply.
We're seeing some projections for a 16 billion bushel corn crop. Stocks to use ratio, which was 1.34 billion bushels this year, could increase to about 2.2 billion bushels next year. Many areas, southern Minnesota, Iowa, western Illinois, are going to have storage problems. I don't know where we're going to put all the bushels. What they do in these small towns is they sweep off the streets, and they have put these big barriers around, and they'll literally pile corn as long as they need to, as many blocks as they need to, and stop using it as a road, but use it as storage area. And I think we're going to see a lot of that this fall.
I mean, won't some of that stuff go bad?
A small percentage. They've gotten very good at it, maybe 2 or 3%. But what's affecting, you have the futures price, which is, you think, corn on the Illinois River. And then when you get out in the hinterlands, where I'm at in southwest Minnesota right now, you'll have your basis. And typically we're 20 or 30 cents a bushel below the Chicago Board of Futures. So if December corn is at $4, our cash bids would typically be $3.70 to $3.80. Now with December futures, corn futures trading at $4, we're seeing cash bids at $3.30 to $3.40. And so the farmers that have not planned ahead, it's a very tough situation.
What about your yield forecast? I mean, did it come in line, or were you anticipating this a little bit? Where were you at, Al?
Yeah, the weather guy I talked to, the weather models I looked at, all showed pretty favorable weather. There were several hints, especially the GFS, the U.S. weather model, which has been pretty consistently wrong, of some extended heat forecast. And so it gave us a 2 or 3 day rally. But the AI weather models, and especially the European and Canadian weather models, have done a much better job. And they didn't ever buy into the extended heat. And so the forecasts that have been models have been correct if you followed them. The Canadian model, the European model, have showed moderate temperatures, timely rains, very little problems in the extended forecast, and that has proven to be true. So we've got a lot of stuff hedged ahead for both 25 and 26 crops, and just trying to own some puts, just trying to make sure that the farmers we work with have some of their income protected.
So how long is it
here?
Go ahead.
Sorry. What about tariff impacts here?
That's what.
The tariff impact is also pretty negative. We typically see, especially in the soybean market, during the months of July and August, China will come in and buy 10 to 15 million metric tons, 350 to 500 million bushels of beans. They pretty consistently come in and buy about 10 or 12% of the U.S. crop in the July-August time period. 350, 400 million bushels. This year, zero. They have not booked one bushel. August 12th is the tariff deadline. And quite honestly, they have booked enough beans and bean products out of Brazil and Argentina. I really don't think they need to buy U.S. beans. Longer term, I think they will come back into the market. But right now, for negotiation purposes, and just because of the weakness of the Brazilian real, they're business people, they're traders, and they can buy it cheaper in South America. So why come to the U.S.? And without having China in buying U.S. beans, I don't know where we're gonna put them all. So the tariff is uncertainty, has been negative for prices. We're not selling corn or soybeans to one of our major buyers into China. Thank goodness Mexico has consistently been coming in and buying millions, tens of millions of bushels of corn. They put that corn onto 100-car unit trains in the western part of the U.S. Corn Belt, and they ship it direct to the feedlots in Mexico. And so that's really been helpful, but it's not enough. We have an overwhelming supply coming at us. If we don't start to trade nice or work out some trade deals, not only with China, but many other buyers around the world.
What about interest rates?
No, go ahead, Dennis. Go ahead.
Yeah. What about interest rates here, Al? Like, does that impact, like if we actually get rates starting to go down in the second half, is that going to be some relief for the farmers?
Yeah, certainly. A lot of farmers are borrowing money for operating at 8 or 9%, trying to figure out how they're going to pay it back. So lower interest rates will help people and their budgeting. A lower interest rate, in theory, would also take the U.S. dollar lower. I think the Fed made a major mistake not lowering rates at the last meeting. I think we'll see one or two low rate cuts later this year. The dollar staying about 98 to 99. I think briefly poked up above 100. But a lower dollar will eventually, and this is a very much a long-term factor, be positive for exports. But lower interest rates and lower dollar are not going to change the overwhelming crop size and the fact that we're going to be having a mega harvest and trying to figure out where to put all the bushels in October, November.
So how are the farmers doing? I mean, the majority of your clients, puts, forward sales. How's the old U.S. farmer doing?
U.S. farmers, this is going to add to the concentration. We're seeing fewer and fewer middle-sized farms, say 500 to 1,000-acre farms. Either you're seeing the 200-300-acre farm, where they also have a full-time job in town, so that basically it's a lifestyle decision. They're living out on the farm. And then you've got the mega farms, 5,000 plus acres, which are more efficient and quite often more sophisticated in doing their hedging. Right now, if a farmer has a normal yield and has to sell in the cash market on soybeans, he's probably losing $80 to $100 an acre. On corn, even with large yields, the current futures price, the current basis, they're losing $150 to $200 an acre. So if you've got a 1,000-acre farm, you're going to work all year, get a large crop, and lose $200,000. This is really taking used machinery values sharply lower. If guys are, running out of money, what can they do? They can sell a pickup, they can sell a combine, they can sell a tractor. And so this is some very difficult times. Ag lenders are very challenged. Some of their younger borrowers that are pretty leveraged, if they've not done a good job in marketing, they don't have the cash flow to make their payments. It's not a good situation. And even the people that have followed advice and have partial hedges and some puts on, they may be able to break even, but the grain farmers are struggling right now, to be honest. The flip side of that is livestock. You've got beef up at new all-time highs. The people are just making a lot of money selling their feeder cattle. They're making $300 to $400 bottom line profit per animal. If you've got a steer ready to go to market right now, you're making $300 to $400 per head profit. Hog farming right now has been very profitable. So the people that are diversified are going to subsidize their crop farming with their gains in the livestock farming, if that makes sense. But if you're strictly a grain farmer and you've not sold ahead, it's a tough situation.
A couple stock related questions here before we let you go. I'm looking at Caterpillar traded at an all-time high. I mean, is it, selling other things than farming equipment here? Deere is not too far off its all-time high. I don't have to make, direct comments on those stocks, but from what you're saying, if they're selling their used stuff, they're certainly not buying new stuff. So Deere not being effective as of yet.
They do a lot of overseas sales. Number one, the overseas farmers are not having this tough situation. They do a lot with construction equipment. Just driving around upper Midwest, I've just been amazed at all of the Caterpillar that used in construction equipment. And especially Deere, they've done a really good job on inventory management. You wanted to buy a new tractor combine, you would go to the county seat, you'd drive 30, 40 miles and go sit down with the guy and see what he had in his lot and what kind of deal he get you. Now, if you want a new tractor combine, you go sit down with the salesman and you order it. They custom make it for you. And if you really want to go to Waterloo, Iowa, you can go watch it being built. And so if they can't sell new equipment, they're not going to just make and hope that they sell it. So there's done a very good job of maintaining profitability. And if you want a new tractor or combine, you're going to be looking 3 to 6 months from now, and you're going to custom order it to fit the tires, the chassis, everything for your farm. And then they'll put your name on it and run it through the factory. So the inventory management has been the key of maintaining a profit margin rather than building it, sending it out to a lot and hoping it sells. That model just doesn't work.
Wow. All right. Good innovation there. Okay, Al, the final thing. I know you like to do your S&P 500 chart by hand every day. Very consistent. Here we are. I mean, I call it basically all-time highs. Sure, we're a little bit off looking at the SPY or the S&P 500 futures. What do your charts say now? A little bit of a pullback, take a little rest this month?
You could. August has a history of not always being the best of the stock market, but the overall trend is up. That's when you're going to have some, right now, a 5 or 10% correction is a pretty major correction as far as you look at the numbers that are involved. But I think that you have a nice double bottom on the longer term chart on the S&P 500. I think that is very likely to hold. The U.S. economy, despite all of the challenges with tariffs and some of the other trade wars that we're finding our way in, continues to chug right along. Corporate tax rates are going down, so cash flow is more positive. The free cash flow out of corporations, which is what investors like to see, continues to pile up as they plug in lower tax rates going forward. So I don't know if you can get some event that comes out of nowhere that bombs the market, but absent that, I just think you're going to keep chugging higher.
Yeah, like a war, a couple wars. All right, Al Kluis Commodity Advisors, Managing Director of Commodities over there at Wedbush Securities. Al, we don't talk about this stuff a lot. Very important to cover. It's always great to have you on. We'll have you on again real soon.
It is food, and that's important no matter where you sit in the world. Also, when I think about inflation, with these lower grain prices, will eventually cause a slowdown in food price increases, especially wheat. You've got wheat, we're trading when the Russia invaded Ukraine up at $12 a bushel. Now it's at $5. Okay. I'm waiting for my price of Wheaties and bread to go down in the store, but I have not seen it yet.
Great way to end it, Al. Thank you very much. We'll talk to you again soon.
Thanks, Al.
Thanks for the call.
A little bit different talk here, right? You got to talk
I like
about
the commodities. You got to get a feel for like what's really happening out there. And I mean, you start getting a little commodity talk in here, and I love the the response there on the Caterpillar, because I've wondered the same thing. I mean, the farmers seem to be having trouble. Why is Caterpillar still making all-time highs? International sales, maybe the U.S. farmers having a little bit of trouble, but internationally they're still rocking and rolling here. So that's a good answer for why Caterpillar. And actually, disappointed earnings, but they bought it right back here too. So Cat and Deere not having any trouble at all with their stocks. Disney,
Okay, yeah.
House of Mouse. We have not covered it here yet. And the earnings were okay here. I thought that they could say something to Warren about, Traveler, maybe the next quarter, but really didn't say too much bad here. I don't know if the conference call is fully done here yet. It started, I think, at 8:30. But right now, $1.61 versus $1.47, 23.65 billion versus 23.71 billion. So a slight miss on sales, probably why the stock was trading down. They did announce last night at 8 p.m. exactly. So if you're going out that they have got, I'm just grabbing the headline here, ESPN to acquire NFL Network and other media assets from the NFL in exchange for a 10% equity stake in ESPN. So that was a big deal for Disney last night. And because it announced it right at 8 p.m., it did not trade after hours, but it did indeed trade on Robinhood and IBK, our overnight session, and was trading up about $4 last night on that news. So they like that news. But then the earnings have come out here and kind of spilled a little bit of cold water with the sales being a little bit light. Subs were fine. 128 million plus subs, up 1.8 million in Q2. So that was good for Disney Plus. So those were good. The report looks fine. Interesting though, still no real talk about slowdown at the parks, which I've been expecting, but it hasn't come yet.
Triple D, you forgot something else on the Disney report. They're doing a landmark rights deal with the WWE. ESPN is going to be the exclusive domestic home provider for all WWE premium live events. WrestleMania is going to be on the ESPN app, which another press release here from Disney, ESPN is going to be launching a direct-to-consumer service and an app. It's going to launch on August 21st. They're going to have all this new NFL content. They're going to have all this new WWE content. Just a couple other interesting little tidbits there to consider here on Disney when you're looking at the chart today.
Why don't they merge all this up with Disney Plus? Like, why don't they, I would be so inclined to pay more for Disney Plus if I could get ESPN and WWE
100%.
and football. I mean, why spread it out over separate apps? You're trying to keep the legacy ESPN thing going somehow. Why not merge it all together? Oh my God, I just spilled my water. Like a full glass of water because I went with my hands. I'm gonna have to get a towel. There's literally everything. But continuing, I literally spilled water over my entire desk.
Go do what you got to do, Triple D. Go for it.
Just finishing my point because the water spill isn't going anywhere anyways. It's literally just swamped my whole desk. Why not merge it all together and have a powerhouse? And let's go at Netflix now. Let's take them on. Disney, get your crap together here. Should I run this company? I would have had metaverse stuff going on back in the day and doing some different things. Come on, merge it all together. Have a Disney Plus powerhouse where we're giving you sports, we're giving you NFL games, we're giving you everything. That's where you're going to start to get people interested. But no, they want you to subscribe to ESPN over here. Keep your cable providers happy. They don't want to stir it all up. Disrupt the crap. Get it all on Disney Plus. Let's go.
No, I think you just said it, Triple D. Disrupting the cable providers or whatever. The sports has been the hurdle. What streaming service do you guys use to go watch your sports?
I gotta go get a towel. I'm gonna be right back. Keep this conversation going.
I don't know if there's a good answer to that. I don't really watch a ton of sports, but I don't have a go-to platform. If I do want to watch some sporting event, maybe a Detroit sporting event, there's not a go-to platform. So Dennis is right, but also I think that there's just something deeper going on here where it's what he said. It's that some of these companies are hesitant to try to disrupt the sports space for whatever reason. I don't know. What do you think, Joel?
I go to same as you. I go where the Tigers are, where the Pistons are, the Lions, the Red Wings.
It's all decentralized, you got to go to a different network for each of them. So
very interesting chart here. And what I'll say is that you have spent so little time under 125. That's just the level of levels on the upside. You did have a high in August of 22 at 126.48, but man, 125, boom, 124, boom. That's your level. That's your major monthly resistance level. So I could say the path of least resistance is lower for Disney until you get above that level. But on the positive sign, but this has been market related. You've made, higher highs on the monthlies, though this month that trend's been broken here. So I don't know what they're going to do. I don't know when they're going to do it. The parks are eventually, they're just so expensive.
10 years.
I can't get excited about the House of Mouse.
10 years. Look at the bottom right chart. 10 years is where we were. 10 years ago, we were at this price. 2016. It's 10 years ago. We were at the same price we are now. We had the big pop in the middle of the big head. It's not ugly head and shoulders, really what it is. A long-term head and shoulders pattern.
Ooh.
Kind of like a perfect chart. So, I mean, your resistance point is well defined up here, 120 to 125. That is like major resistance until broken, and until they can figure out all this stuff, figure out how to better monetize Disney Plus. Yeah, okay, it started making a little bit of money. But, you got to figure this out more here because Netflix is just killing them. There's supposed to be some smart people at Disney. They can produce some of the best content. Just figure it out, man. And you know what? The parks and stuff, that's going to cycle. I think it's going to go to a down cycle, and I think that's going to bring Disney back down. I think the second half's going to be rough for Disney. So, no, I'm not a fan.
Okay, we covered the House of Mouse. We got a few more earnings. Uber? You want to do some Uber, Dennis?
Yeah,
okay.
I'm just trying to avoid all the water on my desk.
Yeah,
Uber, 63 cents versus 62 cents, 12.7 billion versus 12.46 billion. So that's a beat on the top. That's a beat on the bottom. That's fine. That's good. That's okay. $20 billion buyback. So nothing like buying your stock at the highest point here. I'd rather Uber, I'm getting mad today. I'd rather Uber invest in driverless technology as opposed to, they've been trying to sell off their driverless technology here, as opposed to taking $20 billion and rebuying their shares in an industry that is going to be massively disrupted over the next 5 years. I'd rather they were investing in FSD, figuring it out. How can we make, and obviously they don't own cars, which is an issue, but just figuring out, I guess they're doing some deals. They're trying to do a deal in Dallas, but man, I don't know. They're buying $20 billion worth of stock. I'd sell it to them up here. I'm not a fan. I think Uber's going to be massively disrupted over the next few years.
Well, you got an important day, important couple days here. I'm going to throw out the high, throw out the low from that, from the pre-market action. And, these are kind of setups that you could use, to your advantage, where you make a new all-time high in something. You have a substantial pullback to 85, and then you're getting half back. You're getting half back here at 90.91. It was also a period of consolidation before it broke down again. So let's see Uber bulls. Let's see you clear 91, get back up to that all-time high. But right now,
you know what the biggest problem here is that this industry is so ripe for disruption. It's going to bring down the cost of those rides. So Uber may still get a lot of these rides, but people aren't going to be paying $80, $100, $200 to be driving, where they're going, cab ride, $50, $60. We can see what Tesla is doing, obviously in Austin, and they're coming out there at $4.20. Is that how much the ride, or was it $6.90 because he likes this $4.20 and $69? I can't remember that now, but I mean, this industry, the prices are going to go down. This is going to be one area, the CPI will love that, where prices are actually going to drop. It's going to be a lot cheaper to get a taxi ride in 3 to 4 years. These prices are going to drop, and that's going to drop their revenue as well. So they see gross bookings 48.25 billion, 49.75 billion, 2025. I'm going to say in 2027 and 2028, their gross booking dollars are down substantially. Maybe their costs go down as well with it because they won't have to be paying the drivers, but driverless cars are coming, and it is going to make ride share so much cheaper.
Okay, boy, Dennis, you're getting into some corporate management here. Disney telling Disney what to do, telling Uber what to do.
I don't know if Uber can do anything. Here's the problem. They don't own any cars. They've just got to keep signing deals. They're probably doing as best they can. But I don't know about buying $20 billion back right now, their stock. I don't like that.
What's it
wound up. After I spilled the water, now I'm mad. Now I'm mad. Give me one more stock. Chat, give me a stock. Whatever earnings you want to cover has to have had earnings because there was like 150 companies that reported. We could do Unity. We could do,
How about if you've been eating
Upstart, Rivian.
Do
There's
Unity.
a pile of stocks. Where do you want to go?
Do you.
Do you. Do me. Do
Yeah.
you. Unity was down earlier, has turned around and rebounded. Is this the comeback story of one of the comeback stories of the year? Maybe. They're trying to start to finally figure it out here, Unity. 18 cents, supposed to lose 27 cents. I don't know if that's a comparable or not.
Yeah,
440 million versus 425 million. It's a nice be on the top line. The guidance, a little bit higher, but not huge. 440 to 450 versus 440. So I guess it's a slight raise here. Stock was trading down earlier, so I'm not sure if they said anything on the conference call or not to rebound it here, Joel, but we've just massively rebounded here in about the last 10 minutes. And Lisa Su is coming up on CNBC here in a few minutes as well.
You got to bid. You got to bid as we speak live here in Unity Group, up $2.06. What I would do is I would look at this pair of highs at, let's just call it 37.15 from July 18th to July 21st and see if you can get a nibble there. But that's the next resistance point for Unity Software. So, okay, I know you want to tune in and hear what Lisa Su has to say. Also, we're going to hop over to the Stock Trader Network. And I don't know if this has happened before, but S&Ps are in the exact same place that when we started the show. So a little chop, a little drop. They're believing it.
Apple is carrying and lifting, doing a lot of heavy lifting. Apple and value, that's doing the heavy lifting today.
Okay. Thanks for joining us on PreMarket Prep.